It's Monday, April 10th, 2023. Market's pretty flat today, but we have a lot to talk about. Before we do, please make sure that you subscribe to this channel, share all my videos, make sure you give this video a like, and comment about anything you want to comment. Comment down below. Love to know what you're thinking today. Comment on any of these articles I share with you. I would love to know your thoughts. So would everybody else. I would have to say that this comment section is unbelievable, so awake, so outside of the box, and the people in the comments, you have saved so many people from financial collapse. You've gotten people awake. You've gotten people preparing. You've gotten people in better physical shape, better spiritual shape, better mental shape, financial shape, because you are sharing reality. You are sharing the real news out there. But without further ado, let's get right into this today. Market's somewhat flat, but what's interesting is we got some really critical news here. Apple's Mac shipments fall more than 40%, worse than major rivals. And markets didn't really respond to this. Years ago, if we would have got news like this, markets would have been absolutely collapsing today. But because they're so rigged and so propped up that this kind of news doesn't even matter, because the markets are not even in reality. They are in la la land. But again, first quarter 2023, Apple's Mac shipments fall more than 40%. Market share in the PC market dropped from 8.6% to 7.2%. And I believe demand is going to continue to falter here. And now we're beginning to see real cracks in the dam here as the consumer is not strong like the people on the television have been relentlessly telling us day after day. The economy's doing well, the consumer's strong, all this money out there, the consumer's got plenty of cash. They were wrong, they're lying, and this is going to get much, much more difficult to cover up with what is happening to this economy. You know, yesterday, in yesterday's video, I was talking about gas prices going up and how it's going to affect people this summer. And somebody made a great point in the comments. And this individual said, it's affecting people right now. Gas prices and oil prices are affecting people right now at the pump. And this individual, and I'm sorry, I don't remember your name, but this individual recommended next time at a gas station that I should walk around and just see how much gas people are putting in their cars. And I was like, wow, that's interesting. And he said that people are putting in $5, $10, $12. That's all they're putting in the cars, just enough to get by. I mean, think about where we're at right now, where people can only afford to put $5 or $10, maybe $15 in their car. That's what's happening right now. And that's a really, really scary thought, because gas prices are affecting people right now, and they're about to go much higher. CNBC, outlook for credit access hits record low while inflation expectations jump. New York Fed survey shows. Respondents to this survey expect prices to rise by a 0.5 percentage point in the year ahead, equating to a 4.75% annual gain. Those reporting that credit is much or somewhat harder to get than a year ago rose to 58.2%. That's the highest ever in a data series that goes back to June of 2013. Consumers expect gas prices to rise by 4.6% in the year ahead, and they see food prices up 5.9%. I think these are very conservative numbers. I think gas is going to rise a lot more than 4.6%. I think food is going to rise more than 5.9% this year. Very, very conservative numbers. But one thing we can agree on here, they're going to go up. Prices, inflation, it's all going to continue to go up. Morgan Stanley issues apocalyptic real estate warning. This is interesting. We touched on this the other day. More than half of the $2.9 trillion in U.S. commercial mortgages will be up for refinancing within the next 2 years. This is going to be a disaster as rates are much higher, and rates are going to go much higher. This is going to be a disaster for commercial real estate. Think about the debt that these banks are holding right now, these properties that are worth so much less than they were a couple of years ago. These properties, these commercial properties that were at one time flourishing, where people were going to work every day in these office buildings, and now they're sitting vacant. Hundreds of millions of dollars in just one of these buildings. They're sitting on billions of dollars of commercial real estate that is worth a lot less than they think. Demand for vacation home falls significantly from pre-health crisis levels. This on Fox Business. Mortgage rate locks for second homes fell 52% from the pre-health crisis levels in March. 52%. Mortgage rate locks for primary homes fell 13%. We're going to start to see more and more homes coming on the market. In fact, today in the area that I'm looking at, I got 5 more listings sent to me. I'm getting listings every day. I'm getting price reductions every day. And what's interesting is a lot of these homes, I would say 40% of the homes that I'm looking at on Zillow right now, and many of the homes that are sent to me on a daily basis, are vacant. Nobody's living there. So I don't know if they're second homes, if they're flips. I don't know what they are. Nobody seems to know. But we're going to see a lot of people putting their second homes on the market here this summer. Many people are going to try to raise capital. Many people just can't afford this. Many people are going to try to get ahead of this, knowing that maybe their job could be in jeopardy in the next couple months. They're going to unload a property. There's a lot of reasons why people are going to be selling these second homes. Many because they're going to be forced to sell these homes. Many people just can't keep up with the inflation. Maybe a spouse has lost a job already, and they're going to have to cut bait here. But and some people are looking ahead going, what if this happens? What if that happens? I don't want to be sitting on 2 mortgages, 3 mortgages. So they are cutting bait here, and we're going to see more inventory. So you're going to see more new home construction finishing up, going on the market. You're going to see more existing home sales coming on the market. And you're going to see more secondary homes coming on the market. You're going to see more landlords selling their investment properties, especially here in California. Once they get the tenants out, they are done with the landlord business. They're done with rentals, and they will be dumping these rental properties very, very quickly. So we're going to see more and more inventory coming on the market. And the biggest concern here with the housing market is going to be jobs, income. If people don't have jobs, they cannot buy a house. They will be forced to sell a house, not buy a house. And this is going to be a big problem, as we're going to see more and more layoffs right here in America. And I cannot stress enough that if you have a job right now, do everything in your power to keep it. Be the hardest worker. Stay a little later. Get there a little early. You do not want to lose your job right now. There are not going to be a lot of options, especially if you have a good job. Where are you going to go? There are not that many great jobs out there now. This job market is shrinking. Opportunity is shrinking. Keep the job that you have, at least till you get through this collapse. Who knows how long that's going to be. But right now, I wouldn't rock the boat. Right now, I would do everything to keep the job that I have. The hedge. Ports at Los Angeles and Long Beach closed. 40% of all goods into USA come to halt. Please comment down below. But are we going to see more supply shocks coming? According to this article, yes. And does this have something to do with China and Taiwan? Is this an embargo against the United States right now? I don't know. Or do they have a labor shortage down in Long Beach and Los Angeles? This is what the news is reporting, that it's a labor shortage, it's a union issue. So has China pulled back? Is this an embargo? Is China not shipping as much to America? Is it a labor dispute? Is it a labor shortage? Is it a union dispute? I don't know. If you know anything, comment down below. Let us know. But one thing it does is it makes us think this: how dependent are we on China? And what if China said, hey, we're just not shipping to you any longer? 90% plus of the shelves in Walmart would be empty. 90% of your pharmaceuticals just won't be here. It'll be difficult just to get an aspirin here in America if this happens. But think about how vulnerable we are right now with China because they literally make everything from plastics, aluminums, pharmaceuticals, all the cheap products at most of the stores here in America. Most of the shelves are piled with cheap labor products made in China. You want a pillow, you want a pair of shoes, you want shoestrings, you want toothpicks, you want a toothbrush, you want a t-shirt, etc., etc., etc. You know where it's all coming from. You go to the doctors and you need an antibiotic. Guess where more than likely it's coming from? China. So this is a scary thought. So is it an embargo? Is it a union dispute? Is it a labor shortage? Nobody really knows. But it does mean that we may see more of this supply chain disaster taking place. We may not be out of the woods here with this. And does this mean that we're going to see shortages again this summer? I don't know. Love to know your thoughts. The Hedge: echoes of New Century's collapse amid sudden fire sale of real estate loans as one bank sees 40% downside. In this article, it says the biggest drop among small bank loans in the latest week was it's almost $19 billion, $18.7 billion decline in real estate loans. This was a continuation of the $19.2 billion drop in the previous week. So combining the 2 weeks, the last 2 weeks of March, that's $37.8 billion plunging in real estate loans, again, in the second half of March alone. This is the biggest drop since the collapse of the second biggest subprime lender, New Century, back in March of 2007. Is this an omen? Is this telling us something? Are we connecting the dots here? This does not look good. I think anybody buying a house today is absolutely out of their mind. I think it will be a decision that you regret. I think a lot of people right now who bought a home in the last couple of years are really beginning to regret the decision that they made. And when you think about how many people pulled money out of their homes to put in the swimming pool, to upgrade their homes, doing cash out refis, people using the money to buy cars and RVs and boats, think about what is going to happen to these people as they begin to really lose equity in these homes. And when they try to get out, they won't be able to get out. They will be upside down. This is what we saw back in 2007-8, where people were pulling money out of their homes. And then when it came time to exit, to try and run for the exits, it was too late because they could not sell their homes because they had borrowed so much money out of the homes, and prices came down so fast that they were stuck. And those homes went back to the bank. And this is exactly what we're going to see again, except it'll be worse this time. Wolfstreet.com. What are older office towers worth when they finally sell amid record vacancy rates? This was a really good article, and I'm not going to go through the whole article, but I made some notes here, and it's concerning. Private equity firm Blackstone sold two 13-story Class A office towers, the Griffith Towers, in Santa Ana, California. That's in Orange County, California. They sold them for $82 million. And that was a 36% loss. They also walked away from a mostly vacant 26-story, 621,000 square foot, 1950 vintage property in Manhattan, letting the commercial mortgage-backed security holders take the loss. Parkway Property took a 47% hit on a 960,000 square foot property in Houston. This property they bought for $156 and it sold for $82.8 million. Chetrit Group sold a 617 square foot tower at 853rd in Manhattan. This property they sold for $266 million. They paid $422 million back in 2019. You think that this can't happen in housing? It can. Argentic Investment Management took a 40% hit on the 1923 Barney's, New York building. They took possession of this building for $49.5 million. It is now selling. They haven't even taken the hit yet. It's selling for $30 million and there's no buyer. So if they sell it at 30, they're going to take a 40% loss. they're not going to get 30 million for it. Here's another one, 46-story, 1.4 million square foot office building in St. Louis, formerly called the AT&T Center. This sold for $4.1 million in April of 2022. In 2006, this property was bought for $205 million. The proceeds, that $4.1 million, was eaten up with special service fees and liquidation expenses, so it was 100% loss. This is what's coming, and there's many more in this article. So you got St. Louis, you got Houston, you got New York, you got Los Angeles, you got problems in San Francisco. It's happening all over the country. These banks are going to be on the hook for huge losses. The commercial mortgage-backed security holders, huge losses. And then you think about the terrible car loans that these banks made. You think about the FOMO in real estate and the home loans that these banks made. Everything in the last couple of years, cars, RVs, homes, office buildings, everything overvalued, huge overvaluations. And now everything is going to come back to reality, and there are going to be huge losses for banks, bondholders, buyers, sellers. If you were a buyer in the last couple of years, you're going to be taking some big losses. And if you're selling, you're going to be taking some big losses. So it's going to be a very, very interesting time. So we'll see what happens this week. We have a lot of news coming this week. So we'll see what happens. But we're going to get numbers with banks, with inflation, etc. But how much of it's real? How much of it's just manipulated? At the end of the day, just talking to some of my friends, they are beginning to see serious problems in their own circles, people that they know. They're beginning to see trouble. People are losing jobs. People are going deeper into debt. People are struggling to make payments. People are struggling to put food on the table. This is now hitting home. You know people, I know people who right now are struggling, and we're going to know people who go homeless. We're going to know people who lose their homes, lose their cars. You probably already know somebody that's already had a car repoed. You already know somebody who's lost a job. You already know somebody that is struggling. So be extremely thankful to God right now. If you're working, you're paying the bills, you're paying off your debt, you have no debt, you're walking, talking, breathing, you're watching this video today. Thank God. Take a minute out of your day and thank God for everything you have. And most of all, thank God that you're awake. Because if you weren't awake, you'd be in big trouble right now. You're awake, you're preparing, you've been preparing, and that is why you are going to prevail and survive and absolutely flourish during the worst of times, because you are awake and preparing. So I'm going to leave it there today. God bless every one of you. Thanks for all the prayers. Thanks for all the support. Please stay tuned for the next video. As always, I look forward to speaking with every one of you very, very soon.